Welcome to the Deep Dive, where we cut through the noise and get you truly well informed on the week's most fascinating shifts. And wow, what a week it's been.
Hasn't it just?
We've seen changes happening at, warp speed. Global trade talks, huge shifts in government agencies, even how we watch stuff.
It's been a whirlwind, truly.
Hmm.
Our mission today is basically to distill these key developments: politics, economy, business world. We've gone through a whole stack of sources to bring you the most important insights, give you that front row seat to things that really shape your daily life.
Absolutely. We're talking major policy changes out of Washington. Yeah.
Yeah.
Surprising turns in trade, new tech frontiers, finance, and even some, unexpected business wins. It's a snapshot of a world just constantly moving.
And we'll help you see what it all means.
Okay, so let's dive in. Where should we start? How about those fundamental shifts in U.S. foreign aid, USAI?
Good place to start. So Monday, June 30th, 2025, that was it. The U.S. Agency for International Development, USAID, stopped being an independent agency.
Right.
It's now getting absorbed into the State Department.
And that's the end of a pretty long history, right? 6 decades.
6 decades, yeah.
Yeah.
Founded by President Kennedy. The whole idea was promoting U.S. security through goodwill and prosperity overseas.
And this isn't just some, bureaucratic paper shuffling, is it? This got some serious pushback.
Oh, yeah. Strong criticism. Former Presidents Obama and George W. Bush both spoke out.
What did they say?
Obama called it a colossal mistake, a travesty.
Yeah.
He really stressed how U.S. aid saved lives, grew economies, even turned aid recipients into U.S. markets. Bush, he focused more on the cuts to PEPFAR. That was his big aid shive program.
Yeah.
Huge impact.
Credited with saving, 25 million lives? During treatment prevention, the cuts hit that hard, even though some funding was saved after bipartisan blowback.
Wow. And wasn't there something with Bono, too?
Yeah, pretty emotional. He was apparently holding back tears, reciting a poem at a farewell for USAID staff, called them secret agents of international development. And he said, they called you crooks when you were the best of us.
Powerful stuff. It really shows these two opposing views, doesn't it? Like how America should engage with the world.
Exactly. Is it collaborative development, soft power? Or is it more direct, maybe self-focused financial leverage?
Because the Trump administration had a totally different perspective. That was the rationale for the change, right?
Completely different take. Trump claimed USAID was run by radical left lunatics, said it was full of tremendous fraud.
And Elon Musk chimed in, too.
He did. Called it a criminal organization. Pretty strong words.
So what's replacing it? Or how is the State Department framing this?
Well, the new foreign assistance successor is called America First.
Okay.
They're promising proper oversight, making sure every tax dollar spent will help advance our national interests.
But the impact USAID had, it was massive, wasn't it?
Oh, huge. Water and food in places like Sudan, Syria, Gaza, the Green Revolution and agriculture, disease prevention, democracy promotion, economic development.
Right.
The long-term effects of this shift, on global stability, U.S. influence.
Yeah.
It's going to be significant, whichever way you look at it.
Okay, so from that huge geopolitical picture, let's zoom in a bit. Trade battles, specifically digital taxes. Canada made a sudden move this week.
That's right. Really sudden. Canada decided to just rescind its 3% digital services tax.
Just like that.
Yep. They halted collections that were supposed to start Monday, June 30th.
Why the quick turnaround?
Well, it came right after President Trump threatened to halt all trade talks between the U.S. and Canada.
Ah.
The White House basically claimed Canada caved. It just shows how fast things can change when trade negotiations get tense.
Can you remind us what that tax was exactly? Who did it hit?
Sure. It applied to the big tech companies.
Yeah.
Amazon, Meta, Google, Apple.
The usual suspects.
Right. If they earned over $20 million a year from Canadian online services, so advertising, social media, selling user data.
Okay.
And the kicker was, it was retroactive to 2022.
Ouch. How much are we talking?
About a $2 billion burden, roughly, for those big U.S. tech firms.
So both administrations were against this, not just Trump.
Correct. Both Trump and Biden administrations opposed it, said it didn't line up with existing trade agreements.
So what now? Talks back on.
Yeah, negotiations are set to resume. They're aiming for an agreement by July 21st.
Which is important because...
Because the whole USMCA trade deal, the replacement for NAFTA, is up for renegotiation next year. There's a deadline looming.
Gotcha. And this matters to you, the listener, because
The U.S. is Canada's biggest trading partner,
mm-hmm.
and Canada is one of our top import sources. These trade relationships directly impact businesses and consumers,
Mm-hmm.
prices, availability of stuff. It all connects.
And speaking of impacts, these trade tensions, the tariffs,
Yeah,
they seem to be finally hitting consumer spending, right?
it's like it. We saw spending actually drop in May for the first time since January. People cut back on cars, restaurants. It suggests these disruptions are having a real tangible effect now. Goldman Sachs put out a warning too, said tariffs are a downside risk to corporate margins,
Meaning companies might make less profit.
or they pass the costs on. Goldman estimated consumers will end up absorbing about 70% of the direct costs.
Ooh.
And the effective U.S. tariff rate is already up to 13%. Could hit 17%.
And isn't there a deadline coming up?
Yep. That 90-day tariff reprieve from the Trump administration, it expires next week. Treasury Secretary Scott Bessent warned tariffs could spring back for countries deemed recalcitrant.
So potentially more price hikes coming soon.
Could be. Definitely something to watch.
Okay, let's connect this back to policy in Washington.
Okay.
There's this big bill Senate Republicans are pushing.
Cool.
One big, beautiful bill, as they're calling it.
That's the one. They're rushing to pass it by July 4th.
And it has some major implications, especially for clean energy. What's the main issue there?
Well, the core tension is short-term focus versus long-term goals, really.
Yeah.
Fiscal debt, wanting stuff made domestically that's clashing with climate goals and social equity.
How so? What's in the bill for clean energy?
It proposes a tax hike, about $4 billion to $7 billion on wind and solar projects that start after 2027. If they use too many Chinese components, basically, exceeding certain thresholds.
Okay.
And it phases out key tax credits after 2027, the investment tax credit, the electricity production tax credit, things that have really fueled wind and solar growth.
And the consequences of that could be?
Pretty dramatic, according to forecasts. Could eliminate 300 gigawatts of projects. That's about $450 billion worth of investment. Gone.
Wow.
Could also mean higher electricity prices, more strain on the grid, and potentially jeopardize nearly 2 million construction jobs.
2 million jobs. That's huge. I saw Elon Musk had some strong words.
He did. Called the bill utterly insane and destructive. Said it's giving handouts to industries of the past while hurting industries of the future.
Interesting. But you mentioned a counter trend.
Yeah, it's fascinating. Nuclear power stocks like NRG Energy, they're actually seeing gains while this is being debated.
So maybe a shift in energy strategy focus.
Could be part of it. It definitely raises questions about the long-term plan. But what's the rationale for the bill given these potential downsides?
Well, proponents would likely point to deficit reduction and boosting domestic manufacturing. But beyond energy, there are big concerns about income inequality, too, right? Yale Budget Lab did an analysis.
They did, and it raised significant flags. They projected the bill would cut income for the bottom 20% of households by about $700 a year,
Wow.
while raising income for the top 20% by around $5,700 a year between 2026 and 2034.
That's quite a disparity. How does that happen?
Largely due to what the analysis called sharp cuts to programs like Medicaid and SNAP, the food assistance program,
Okay.
while at the same time, tax cuts in the bill tend to benefit wealthier households more.
And the CBO, the Congressional Budget Office, they weighed in, too?
On the original House version, yeah. Their estimate was even starker. Bottom 10% lose $1,600 a year. Top 10% gain $12,000 a year.
And the debt.
Adds about $3.3 trillion to the national debt, or $4 trillion if you count interest.
So it really encapsulates that whole Washington debate, doesn't it? Balancing budgets now versus future investments and, well, who benefits?
Absolutely. It's a microcosm of that larger fight.
Okay, another ongoing economic story. The Fed and interest rates. The criticism from President Trump towards Fed Chair Jerome Powell continues.
It does. Pretty consistent criticism, accusing Powell of keeping rates artificially high. They're currently in that 4.25% to 4.5% range.
And Trump says this is costing the U.S.
hundreds of billions of dollars. He even showed a chart comparing U.S. rates to other countries like Switzerland, Japan, Canada, which have much lower rates.
But Powell's reasoning hasn't changed.
Nope. His justification remains the same. He expects inflation to increase because of the U.S. trade wars, so he's resisting pressure to cut rates.
And other Fed officials agree.
Seems so. Raphael Bostic, the Atlanta Fed president, basically said July probably won't give them enough clarity on inflation or the job market impacts from other policies to justify cutting rates.
So this uncertainty could drag on.
Potentially well into 2026, according to Bostic. The Fed's holding steady for now, despite the pressure.
Okay, after all that policy and big picture economics, let's shift to the markets themselves. They've been on quite a ride. Monday was a big day.
Huge day, June 30th. S&P 500, NASDAQ, Dow, all hit record highs.
Closing out a strong month and quarter.
Very strong. S&P up nearly 5% in June, NASDAQ over 6%, Dow over 4%.
But it wasn't a smooth ride getting there, was it? The first half of the year was volatile.
Historically volatile, actually, for the S&P 500. About a third of trading days saw swings of 1% or more. That's way above the 10-year average of 25%. Wow. But, as the analysts say, resiliency has prevailed.
So what's the outlook? More gains ahead.
Depends who you ask. U.S. Bank Wealth Management sees more upside for the S&P, maybe hitting 6,325. They're citing stable inflation, rates staying in a range, better earnings. But others, like UBS and Barclays, are still advising caution. They see pockets of vulnerability, saying investors need to be nimble.
And there are some interesting, maybe slightly weird market predictors flashing signals too, like the gold-platinum ratio.
Yeah, that one's interesting. It's considered a proven stock market predictor.
And it's turned bearish. What does that actually mean for you, listening at home?
Right. Well, historically, platinum is used more in industry, so its price can reflect economic growth expectations. Gold is the classic safe haven.
Okay.
So when platinum starts underperforming gold significantly, like it has recently, one of its biggest drops, it suggests investors are getting nervous about the economy. They're moving from riskier assets to safer ones.
A risk-off signal.
Exactly. And historically, it can precede a major decline in the stock market. So it's definitely a warning sign.
Another potential warning sign being talked about is penny stocks.
Yeah, the trade in really cheap stocks, shares under $1, is apparently booming.
And that's bad because,
Well, some see it as a sign of speculative excess, like too much froth in the market, when lots of people are piling into super risky, low-priced stocks, hoping for a quick buck.
it might mean things have gotten a bit irrational.
That's the idea. It can sometimes foreshadow broader market volatility or a correction. It's a sign of maybe too much exuberance.
Okay, so after all that policy and market stuff, let's zoom in on the companies, the entrepreneurs. Who's actually winning right now? What are their strategies? Tech sector first, AI seems to be the big driver. Meta.
Oh, yeah. Meta shares hit a record high, closed at, what, $738? Driven by excitement about their new AI superintelligence group.
And Zuckerberg's been aggressive on hiring.
Extremely. Poaching researchers from places like OpenAI. Reports of signing bonuses up to $100 million.
Wow.
They're investing heavily in companies like Scale AI too, hiring top people. It just shows the intense race for AI talent. Everyone believes that's the next big thing.
And Oracle's riding the wave too. Cloud boom.
Big time. Stock jumped 4% to an all-time high. They filed about a new cloud deal that's expected to bring in over $30 billion a year starting in fiscal 2028.
$30 billion a year from
Yes.
one deal.
That's the expectation. The shares are already up over 33% this year. Benefiting from cloud growth, AI models. It's like the picks and shovels play in the AI gold rush. They're doing really well.
Makes sense. And the NASDAQ 100 overall. Still looking strong.
It's had a great run. The QQQ ETF is up like 26.6% in just 50 trading days since early April.
But not overextended.
According to Data Trek Research, no. They think it's not dangerously overextended, so maybe still some room to run for tech.
Okay. Financials. Goldman Sachs doing well.
Yeah, their stocks surged after the Fed's stress tests. The tests basically found the U.S. banking system is sound, even if there was a nasty recession. So a vote of confidence for banks like Goldman.
All right, let's move to retail and consumer stuff. Raising Cane's, the chicken place. They're having a moment.
A huge moment. They've actually surpassed KFC in U.S. sales now. They're number 3 behind Chick-fil-A and Popeyes.
Really? How'd they do that?
It's kind of remarkable. They reported $5.1 billion in sales last year, grown to over 900 locations.
It's such a crowded market.
Right. Their secret seems to be simplicity. Very limited menu, just chicken fingers, fries, slaw, toast. And crucially, 97% of the stores are company-owned, not franchised.
Ah, control.
Tight control over quality operations. They also have a really high average sales per store, $6.6 million.
Too less than Chick-fil-A, though.
Yeah, Chick-fil-A is even higher, $9.3 million. But Cane's is impressive. Their Times Square spot did $25 million last year alone.
Wow. And no plans to IPO.
Nope. They rely on traditional bank loans for growth, a different model.
Interesting. What about Walmart? They're getting into the beef business.
Directly, yeah. They opened their first owned and operated beef facility in Kansas.
Why?
Cut out the middlemen, controlled costs, ensure supply. especially since beef prices are up 8.6% year over year.
Makes sense. And maybe improve quality perception.
That's part of it, too. Boosting their image for fresh food quality is key for them.
Home Depot's making moves too, buying GMS.
Yep, for $5.5 billion, they're integrating GMS into their SRS distribution unit. The goal is to scale up their business supplying building products to pro contractors, solidifying that professional market.
Okay. On the flip side, Crocs is struggling a bit.
Yeah, sales down over 30% in the last year. The CEO basically admitted the U.S. clog market is saturated, well penetrated.
So what's the plan?
Well, both analysts see potential internationally, Western Europe, China, India, and also focusing on selling directly to consumers through their own stores and website, so trying to find new growth avenues.
We're also seeing some creative new revenue streams. NASA on Netflix.
Yeah, isn't that cool? NASA's going to stream live stuff, rocket launches, spacewalks, Earth views on Netflix this summer.
Trying to reach a bigger audience.
Exactly, a global audience. The content will still be free on the NASA app, but this is a new partnership.
Yeah.
And Netflix shares also at all-time highs.
And Robinhood's making news too. Tokenized shares.
Right, their shares hit a record high, up 10%. They launched these tokenized shares of private companies like OpenAI and SpaceX for users in Europe.
What does tokenized mean here?
It means they're using blockchain to create digital tokens that represent ownership in these private companies.
So making it easier for regular people to invest in startups.
Pretty much.
Wow.
Lowers the barrier to entry. Usually only big institutions can get into those deals. They're offering tokens for over 200 U.S. stocks and ETFs too, tradable 245, no commission in the EU.
And for U.S. users.
They brought back crypto staking for Ethereum and Solana.
Okay, fascinating. And quickly, an entrepreneurial spotlight, Dakota Peters, whatnot.
Incredible story. 25-year-old college dropout. Built a sports trading card company called Decrypts,
And it's huge.
bringing in over $1 million in gross merchandise value per week on the live auction app Whatnot.
Per week. Wow. How did she start?
With just $500 or $600 from her first stream, now employs over 40 people. Expanding into thrift clothes, coins, just shows the power of niche markets in these new live platforms.
Amazing. Okay, let's shift gears again. Social political landscapes. Harvard University, big news there.
Yeah, pretty significant. The Trump administration's probe found Harvard violated the civil rights of Jewish and Israeli students.
That's a very serious finding. What were the specifics?
The report detailed severe, pervasive, and objectively offensive harassment. It also mentioned institutional acceptance of anti-Semitism, particularly after the October 7th Hamas attack. Harvard's response was called deliberate indifference.
What are the consequences for Harvard?
Well, the administration had already frozen over $2 billion in federal grants.
$2 billion.
Yeah. And they might refer the case to the Department of Justice for a federal lawsuit.
How's Harvard responding?
They strongly disagree with the findings, say they've taken substantive, proactive steps. Columbia University got a similar notice too, apparently.
Okay, another big political story, especially here in New York. The NYC mayoral race. Zoran Mamdani, the presumptive Democratic nominee, he's a Democratic socialist.
That's how he identifies, yes. And he's proposing some pretty bold economic ideas, sparking a lot of debate.
Like the city-owned grocery stores.
Exactly. A $60 million plan for taxpayer-funded grocery stores in all 5 boroughs.
The idea being...
Lower food costs. They'd be exempt from rent, taxes, buy wholesale, partner with local farms, also meant to address food deserts.
And he also said something about billionaires.
Yeah, stated pretty clearly we shouldn't have billionaires. Proposed an extra 2% tax on the top 1%, people making over $1 million.
Predictably, that's drawn some fire.
Oh, absolutely. From business leaders, economists. The Cato Institute Heritage Foundation warning about government-run stores lacking market discipline. Potential for bloated costs, empty shelves, zero accountability.
Might even hurt private stores.
They argue it could exacerbate food shortages by making it impossible for private supermarkets to compete.
And specific business leaders reacted.
Yeah. John Catsimatidis, the supermarket billionaire, threatened to close or sell his Gristedes and D'Agostino stores. Might even move his corporate offices out of the city if Mamdani wins.
Wow. Hedge fund managers, too.
Bill Ackman, Dan Loeb. Very strong concerns. Ackman said he'd finance an alternative candidate, claimed Mamdani's policies would destroy jobs, drive businesses and wealthy people away.
Dan Loeb.
Loeb called it officially hot commie summer.
Well, it's certainly generating headlines, and President Trump weighed in.
He did. Threatened to cut federal funding to NYC if Mamdani gets elected and doesn't behave.
How does Mamdani respond to all this, the communist label?
He denies being a communist, Says the attacks are distractions from his focus on working people, affordability. He points out NYC is the wealthiest city in the wealthiest country, yet 1 in 4 New Yorkers are living in poverty.
It's definitely a stark clash of economic ideas playing out right here. Big implications for the city.
Huge implications.
Yeah.
And really highlights those deep partisan divides you see everywhere now.
Okay, one last quick hit. President Trump criticizing AT&T.
Yeah, bit of tech trauma. He blasted AT&T on Truth Social over technical problems during a conference call. Said AT&T obviously doesn't know what they're doing.
And the timing was interesting.
A little ironic, yeah. It happened just weeks after the Trump Organization launched its own wireless service, Trump Mobile, which, by the way, runs on networks including AT&T's.
Right, okay. So wrapping up this whirlwind tour, we've covered a lot today. Huge shifts. Global stage stuff like USA, trade tensions, domestic policy like that big, beautiful bill, deep dives into business, tech. We've really seen how fast things can change and how interconnected everything is.
Absolutely. And whether it's, how tariffs might hit your wallet,
Yeah.
or how a tax bill could reshape the economy near you, or just how your favorite chicken chain or tech giant is adapting. These aren't just abstract headlines. These are the currents shaping your world, your choices, even creating new opportunities maybe.
So the big takeaway for you, listening, what does this all mean? Maybe consider how fast things moved this week. Canada pulling a tax overnight, a huge agency like USAID being absorbed. It really shows the immediate power of political will, doesn't it, on this incredibly connected global economy.
It really does.
It makes you wonder, how much agency do we as individuals really have when things shift so quickly, so decisively? And what might be the long-term unintended consequences of these rapid changes?
That's the million-dollar question, isn't it?
So maybe think about this. Armed with these insights, what's one area, just one, that you'll pay a little closer attention to this week? Something to mull over.